Okay, so let's have a brief review of what we understood last time. So the exchange rate, no, there are three kinds. By the way, the exchange rate is the price at which one currency can be converted into another currency. So when we speak of exchange rate, now we speak of two currency, no, the domestic currency and also the other country's currency or the foreign currency. Okay, we are comparing the value of one currency with another. Okay, and I also want to clarify that the currency can actually appreciate or depreciate relative to another currency. So the Philippine peso can actually depreciate against the dollar, for example, and appreciate against the dollar, for example. So when the Philippine peso depreciates against the dollar, you will notice that the number goes up, or the nominal price of the Philippine peso goes up against the dollar. It depreciates. Nagmamahal, ibig sabihin. The dollar becomes more expensive. So be careful because it's counterintuitive. Okay? When we say it depreciates, no? It actually weakens, but the number goes up, no? So it just means that the dollar is becoming more expensive. So if the dollar today is 40 pesos and it becomes 50 pesos tomorrow, that is an example of the peso depreciating. Okay, so let's make that clear. And the opposite can occur. No? So when the Philippine peso appreciates, that means it actually strengthening against the dollar in comparison to the dollar. Okay? So the number goes down. Kasi nagbumura yung dollar. Eh. Di ba? Okay, it becomes cheaper. You need less peso to buy the dollar. So if the dollar is 40 pesos now, and then it becomes 30 pesos, that's an example of the currency appreciating, or it actually strengthens, it's strengthening against the dollar. Okay? So this is what we mean by exchange rate. No? So it moves up, moves down, it fluctuates. Okay? Now, the movement of the foreign exchange rate now is due to several factors. No? So under the independent floating exchange rate system, it is influenced by demand and supply, market forces. Okay? So let me proceed. No more questions about this. Managed floating exchange rate system. There is a participation of the government in managing the exchange rate. Okay? The government doesn't want to make the currency devaluate so much against another currency. No? Just like in the Philippines, I mentioned before. Ayaw nating masyadong tumataas yung dollar. Okay, so the central bank actually imposes some measures in order to avoid this. No? So you remember I explained this. No? They buy currency. So when they say they buy currency, they just exchange more peso with dollar to increase the supply of dollar in the economy. So hopefully this will stabilize the price of the dollar. Okay, then the fixed exchange rate, no, you are actually pegging your currency with another foreign currency, just like what China is doing. No? So they want the yuan, no, their currency, to be weaker than the dollar. So they do not want it appreciating. Okay, so this is the strategy I mentioned before because they want more exports. Okay. Okay, now let's proceed with independent floating exchange rate system. No? So demand and supply for currency now will affect the exchange rate. Okay, so these are some of the determinants of foreign exchange demand and supply. Change in foreign tastes, change in trade prices, change in income levels, change in capital flow. Okay. So what do you mean by change in foreign taste? Change in consumer behavior. Okay, so if there is demand for so much imported items, there is an increase in tourism. Okay, there is a greater demand for foreign currency, and this will affect the price of the foreign currency. So it will affect the exchange rate. Diba? So pag marami nagtra-travel, for example, dito sa Philippines, maraming gustong mag-abroad, they need dollars. They have to exchange Philippine peso with dollar because they will be spending dollar abroad. Okay, so this increases the demand for the dollar, and thus affecting the exchange rate. Okay, the same is if Filipinos would increase buying imported commodities. Tulad niyan, yung iPhone, no? So there will be greater demand for imports. Okay, so greater demand for foreign currency for the dollar. Okay? Questions, by the way? If you have any questions, you just speak up. No problem. Okay? So these are forces that will affect the value of the dollar, the value of the foreign currency. So ang dollar ngayon, 40 pesos eh. No? Nasa 40 peso range, 48, 45, I don't know, but nasa 40. Dati yan, nasa 50 peso range. Okay, 55, 52. Okay, so maaring bumaba yung price ng dollar kasi humina yung demand. One reason can be demand because people are not going abroad. There is less tourism. Diba? Less demand for foreign currency for spending abroad. Okay, so that can be one reason. There are many reasons. Okay, ayan. So pwede rin nabawasan ng gastos natin, demands for imported items. Okay, so imports are low. Okay, so there's demand for the currency, but it's low. Okay, masyado bumibili. Pandemic eh. Alright? Okay, change in trade prices. No? It will also affect the value of the currency. Like, bumaba yung tariffs. No? Taxes for imports and exports goes down. So we have a change in trade prices. Okay? So in other words, for example, bumaba ang pag-import ng sasakyan because tariffs are low. Okay? So it's now cheaper to be importing. So this means businesses will be demanding more dollars so they can import more cars. Okay, di ba? So it's cheaper to be importing. Okay. So those are change in trade prices. Another is change in income levels, change in consumer salaries and wages. Okay, so kita niyo ba yung picture na to? You see that? Where do you think that picture was taken? Singapore? Monaco? Hong Kong? That picture was taken in Fort Bonifacio, Taguig. Okay, so merong ano dyan, may Bentley, may Lamborghini, may Ferrari. You see that? Okay, so this is evidence that there is a growing number of people who can really afford imported goods, no? Exotic cars. No? So there's a growing number of rich people here in our country. So this is a sign of growing compensation, salaries and wages. So if there is a greater earning power, there is so much demand for sophisticated and exotic imported items. Okay, so this will definitely increase the price of the dollar because they will be needing dollar for imports. Okay? Importing these like these supercars that we see in the photo. Okay, so imagine that meron ng ganyan sa Philippines. Actually, there's a Rolls-Royce showroom in BGC. Okay? Paminsan-minsan sa Katipunan, nakakakita ko ng Rolls-Royce. Okay, so there's one guy, I don't know if it's a guy, who rides around in a Rolls-Royce. Okay, Phantom. Yan. Change in capital flow. Okay, so if you remember, we discussed the balance of payment. Actually, and every account in the balance of payment, will affect the price of the dollar, the price of foreign currency, because this will affect the supply of the dollar in our economy. So change in foreign direct investments, for example, foreign direct investment is under what account in the BOP? Class. Foreign direct investment under what account in the balance of payments? Nakalimutan na. Di ba na-discuss natin yung balance of payments? Dalawang account yung balance of payment. Oh. Are you here? Do you hear me? What account is FDI? Plus. Sa balance of payment. What account? Yung klase, di ba? Current account o financial account? O sige. Current account or financial account? Class. Am I being heard? Hello, Houston?
Yes po, sir. Rinig po kayo.
Okay. Walang sumasagot eh. Tatin natin sa chat. May sumagot ba sa chat? Okay.
Wala po.
Wala. Wala eh. Sige na nga. Ito na nga. Kayo naman, oh. Yan, oh. Financial account. Na-discuss na natin to, di ba? O hindi pa? Tapos na tayo dito. Ayan, oh. Foreign direct investment. Financial account. Kayo talaga, Hindi pa kasi nag-almusal. Understood. No problem. Okay. So, change in capital flow, foreign direct investment. So, naturally, if foreigners will be investing in our country, they will be bringing with them money, dollars, for capital. They will buy assets, di ba? Fixed assets on foreign direct investment. If you remember. They will buy buildings, they will buy machines, they will buy factories, land. Okay? So they will be bringing in their money. So capital yon, no? That's cash going into our economy. So more dollars will affect the price of the foreign exchange. Okay? So let me just show you one infographic here that's very interesting. Okay, countries with the biggest Forex reserves in the world. Ano bang bansa may pinakamalaking foreign exchange reserve sa mundo? Sino to? China. 3.16 trillion yan. Dollars. Diba? Kay Japan. 1 trillion. Okay? And then Switzerland. 785 billion. Philippines. Ayun, 69 billion. Diba? 69 billion. Okay. So Forex reserve yan. So it shows the performance of the economy. Okay, it may show that the company is very good at exporting products, selling abroad. So there's money coming in. It also shows that there are a lot of investors in that country. Okay, so that's money coming in our country. No, so that's cash inflow. They bring in dollars. Okay. So foreign exchange reserve is very important. I will discuss this later why it is important. This is an old infographic. This is interesting because you look at the United States. No? 44 billion lang yung kanilang foreign exchange reserve. Well, luma na to, 2018 kasi ito klase. Pero wala akong makita. Pero ang updated information dito sa foreign exchange reserve ng US, nasa ano siya? Nasa 120 billion na. Okay. Luma na kasi ito. Pero at the time that the infographic was made, mas malaki pa yung Forex reserve ng Philippines. 70 billion kesa dun sa USA. Di ba? What do you think? What's the reason? Does it mean that the Philippine economy is performing much better than that of the US? Do you think? That's the reason. Well, one reason could be, marami kasing remittances din sa Philippines. Diba? Okay, so kasama yon sa money coming in, dollars coming into the country. Marami tayong OFW. They contribute so much to cash inflow. Right? The foreign exchange of the US is not in dollars naman. Foreign exchange is in euro or probably in pound. Okay, so the dollar is out. The money, the dollar is out. It's being used by the world. So they hold so little foreign currency because the foreign currency that they hold is well, to them it's not that important. Okay, so they hold little euro, they hold little pound. Pero meron naman silang gold reserve, no? Nasa US ang pinakamalaking gold reserve. Okay, nasa Fort Knox. Okay? So that's the reason. Okay. What is the importance of having a foreign reserve? Okay. So if you remember, we monitor money coming into our economy through the balance of payment. And money coming into our economy, dollars coming into our economy, will help in increasing foreign reserve. Okay, so that's the supply of dollars that we keep in the central bank. So why do we do that? Why do we need foreign reserve? Why do we need dollar in our economy? Okay, first, it is a guarantee for foreign debt. It's a guarantee for foreign debt. What does it mean? Madali tayo nakakautang sa IMF or sa World Bank. We can easily borrow money because they know that we have the ability to pay. Okay? So we have a collateral, and that is our foreign reserves. Number two, it is also used to influence the exchange rates. So we have mentioned the managed exchange rate and the fixed exchange rate. Okay, so this is how the central bank of an economy influences the exchange rate. No? So they just control the supply and demand of foreign currency in their economy. Okay, so sa managed exchange rate, just like in the Philippines, we do not want the Philippine peso depreciating so much. We do not want the dollar to be too expensive. So we manage it, for example, by increasing the supply of the dollars in our economy, and hopefully this will stabilize the exchange rate. So we influence the exchange rate using our foreign exchange reserve, our dollar reserve. Okay? And number three, More foreign reserves also mean more market confidence. So in other words, if a country has more foreign reserve, it actually means that it can be, it is able to invite or attract more investors in that country. Okay. Due to strong reserves, many people from countries are willing to invest in that country. Okay, because they have strong foreign exchange reserve. And why do you think that that is so? Well, to keep it simple, because it's easier for them to exchange local currency with foreign exchange, no? So they can easily, let's say you're an American investor here in the Philippines, you can easily exchange the Philippine peso that you earn through revenues and exchange it with dollars. Di ba? So pag wala tayong foreign exchange reserve, paano na yung mga negosyanteng banyaga? Papalit nila yung pera nila, Philippine peso nila. Papalit nila sa dollar. Pag wala tayong ipapalit. Okay? That's going to be a problem. See? So a country with very large foreign exchange reserve can attract more investors kasi madali silang magpalit ng pera. Okay? Pag mahirap magpalit ng pera, no, they are not confident with the country because they will fear that the money that they earn cannot be exchanged with foreign currency, with dollar immediately. Okay? In case of emergency, gusto nilang ipalit yung pera nila, gagawin nilang dollar, emergency, aalis na sila. If the country has very low foreign exchange reserve, they cannot do that. Okay? So ayan. So those are the factors that will affect the demand and supply of foreign exchange. The price of foreign exchange. Questions, class?
Wala po,
None
sir.
po.
Okay,
None, sir.
before we proceed, no? Ayan. So what are the components of the foreign exchange market? Ayan, foreign exchange market na tayo. So there are three types of foreign exchange markets, no? First is the spot market. Second is the forward market. And then the futures market. Okay? So what is the spot market? The spot market lang is a market or is a transaction, any transaction wherein you deliver a good and then you receive payment immediately. Okay? So you buy, for example, stocks and bonds. No? Let's say you pay in dollars, no? Upon the receipt of the share, upon the receipt of the bond. Okay? So that's it. No? That's what you call the spot market. Other example is the commodities market. No? You buy gold, no? Or you bid in the electricity or the energy market. Okay? So once you acquire these items, you really have to pay in cash. Kaya nga tinatawag nila spot. Spot means instant. So there is an instant exchange of currency, foreign currency in the spot market. So just like in the stock market, just like in the commodities market, now these are all examples of spot markets or markets that exchange money immediately. So there's an exchange of foreign currency immediately in that market. They call it the spot market. Okay. Another market is what we call the forward market. Okay. Now, what is the forward market? Now, this is related to our lesson later, no, yung forward rate. Okay. Forward market actually involves forward contracts. No? So it is an agreement between two parties, and they will agree on a future price of a commodity. Okay. For example, I am a exporter. No. Let me be the importer na lang. No? I'm importing goods, no, from the United States. So, if the current exchange rate is 40 pesos, no, I can agree on a future forward rate, no, a forward exchange rate, no. So I can say, usapan natin 42 pesos na lang sa future ng exchange rate natin. Okay? So we will agree, no, I'm the importer, I will agree with the exporter from abroad that this will be the exchange rate, no, in the future. Okay, you call that the forward market. Okay, so you agree on a certain price for a commodity. You agree on a certain exchange rate in the future. Okay? The question is, why do you do this? Why do you think you do this? Why do you have to agree on a future exchange rate? Because the foreign exchange is very volatile. It can change it, and this will affect the value of whatever you are purchasing, whatever you are importing or exporting. Diba? Okay. So if the exchange rate, for example, at the time that I was importing, for example, 40 pesos, tapos in the future, maging, example lang, maging 50 pesos, I will be paying more peso for the dollar. So the import becomes more expensive on my part, no, if I am the importer. You see? So I have to agree on a future exchange rate. Okay, forward rate ang tawag doon. So I enter into a forward contract. Okay? So I will agree on a certain exchange rate for the goods that I am importing. So that in the future, I do not pay so much. No? It is a way of protecting myself from the volatility of fluctuating exchange rates. That's the forward market class. Questions? Forward market yun. So all types of transactions similar to this are called are part of the forward market, and then you enter what you call forward contracts. Questions? Actually, dinidiscuss din to sa finance. No? But it's actually, these markets are actually very complicated, to tell you the truth. No? But I'm just trying to simplify so that you can understand it better. Madaling maintindihan, no? Okay, another market is what we call the futures market. So future naman, no? Futures market. Actually, futures market similar then to forward market. Okay, so futures market again is a way of protecting yourself from risk because of price volatility. Okay, so it's similar to forward market. I'll give you an example. No? For example, I'm a farmer, and I'm harvesting tomatoes in the future, and I want to sell them at 20 pesos per kilo in the future. I will be happy for that. 3 months from now, I will be harvesting, for example lang, and I want to harvest them and sell them at 25 pesos per kilo. But we know very well the price of tomatoes in the market, in the economy, is always fluctuating. What if the price of tomatoes becomes lower? Becomes 10 pesos, 8 pesos a day. Talo na ako. Okay? So I will look for somebody who invests in futures contracts. Now, what he does is actually he will protect me from price volatility. He is going to say, okay, in 3 months, when you harvest, I agree that I will buy your tomatoes for 25 pesos. If the price falls down, no, I will pay you the difference. So for example, the price falls down. It falls down to 15 pesos. So meron 10 peso difference. I will pay you that difference. Okay. So he is protecting me, the farmer, from price volatility. Okay. So this is also a kind of contract. It's a future contract. Okay. Now, the question is, why would this person, why would the investor agree to protect me from this risk? Why would he do that? Diba? Agree to pay me 25 pesos in 3 months. Agree to buy my produce at 25 pesos after 3 months. Why would he do that? Diba? That's the question. What do you think, anyone? Because he's betting that in the future, the price of tomatoes will be more than 25 pesos. Probably he's betting it will be 30 pesos, 40 pesos. So he can earn money. Okay? He pays me 25 pesos, but he's going to sell the commodities at 30 pesos or 40 pesos at a higher price in the future. He's betting the price of the commodity of the tomato will be higher in the future. So he's betting on that. This is a simplification of the futures market. The main difference actually, class, between forward market and futures market in reality, no, yung forward market between two parties lang, no? So it's a simple contract. It's very straightforward between two parties. No intermediaries needed. So they call this over-the-counter contracts. So contracts between export and imports, exporters and importers, no? They enter into a forward contract specifying an exchange rate, specific future exchange rate, yung forward contract yan between two parties. Yung futures contract kasi, futures market, madalas yan, ano, meron parang stock market. No? So ang tinatawag nila futures exchange market. Merong stock exchange, merong futures exchange market where it's a place, it's an establishment where they actually trade future contracts. Yun. So forward market between two parties. Yung futures market naman, trine-trade yan sa parang stock exchange. Di ba minsan may nakikita kayo sa electronic tape pag nanonood kayo ng CNN or Bloomberg, no? Sa baba mayroong gold, oil, corn, wheat, flour, yun. Commodities yun. They're actually trading contracts based on this commodities futures market. So yun ang pinaka in reality, na hindi naman na-mention sa book actually. No? Yan talaga difference ng futures market. Wala niyan dito sa Philippines. Sa Philippines, ano lang, stock market lang. Sa ibang bansa, meron yan sa US futures market, no? Based on commodities. Okay, so yung forward market at saka futures market sa finance, in finance, that's also called, they also call it derivatives. It's also called derivatives. Okay? So pag sinabing derivatives yan, tungkol yan sa forward market, tungkol sa futures market. Okay? So in the futures market, again, investors are speculating. They're speculating, they're buying future contracts, speculating that the price of that commodity will be higher in the future. Yeah. Okay. So at the same time, the producers of the commodity are protected from price changes, price volatility. So that's what makes it similar to the forward market. Okay. So do you have any questions, class, about the types of foreign exchange market? Spot market, forward market, futures market. Okay. Okay, so forward market, again, you agree on a future price or a future exchange rate. Okay, you protect yourself from changes in foreign exchange and changes in price. Okay. Futures market naman, also the same, no? But you need an investor. No? The investor actually can also sell the contract. It becomes like a marketable security. So that's the futures market. And the futures market refers to this trading in a future, in an establishment, no? That sells contracts, futures contracts. The futures market yan. Clear tayo dyan, ha? Now, let's talk about some very common terminologies in foreign exchange when trading with foreign exchange. Okay, so yung bid-ask price, madalas nakikita natin ito sa banks. The bid-ask price. Diba? So when you enter a bank, they will buy your US dollar, no, at 48. Okay, they will buy your dollar at, they will pay you 48 pesos. And this is the selling price. Okay, that's the selling price. They will sell you the dollar if you pay them 48 yan. Okay, so we call that the bid-ask price, no, in banks. Now, meron din tinatawag na direct quotes. Okay? Merong direct quote and indirect quote. Okay? So, direct quote, ito yung pinaka-common expression. So, the price of a foreign currency in domestic currency or the number of dollars per 1 unit of foreign currency. Gawin natin itong peso para mas madali na maintindihan. Okay, the number of pesos. So what is the number of pesos in order to buy $1? Okay, it can be, for example, 47 pesos per $1. So when you see that, now you have to pay 47 pesos in domestic currency to acquire 1 unit of foreign currency. When you see that expression, that is called a direct quote. It's the most common expression. We see that in newspapers and on the internet. Okay. Next, we have indirect quote. The indirect quote is the reciprocal of the direct quote. So binaliktad mo lang, no? The price of the domestic currency in foreign currency terms. Okay. So in our example, how much is 1 peso in US dollars? Magkano naman yung piso? 1 unit of the domestic currency in US dollar. So this is the one. No? It's normally expressed in this manner. Okay. So 1 peso equal to 0.21 in US dollar. So at that exchange rate of 47 peso per US dollar, our 1 peso is equivalent to only 21 cents. No? 21 cents in the US dollar. Okay? So that's what you call the indirect quote. Madalas ang nakikita natin, direct quote. Direct quote, expressed in pag pumunta kayo sa mga what do you call this? Yung magpapapalit kayo. What do you call that establishment? Money exchange market. Okay, you go to that establishment, that's what you see. Okay, then you have indirect quote. You see this in business newspapers. Okay. Other terms, the forward rate, discount rate, premium rate, and the hedge. No? So when we say forward rate, the price at an earlier time of the currency in terms of another currency established for future delivery in the forward market. So what does that mean? It's related to our discussion a while ago, forward contract. Okay, you decide on a future exchange rate. So the future exchange rate is what you call your forward rate. Okay. So for example, no, we are two businessmen. I'm an importer, you're an exporter, and then I will agree. We will both agree that the future exchange rate for the dollar, no, will be, right now it's 40 pesos. No? Let's make it 45 pesos. 45 pesos. And that's what you call the forward rate. Okay. So ang forward rate, pwede rin mas mababa. Kung 40 pesos ngayon, pwedeng ang forward rate ay 39 pesos lang. Okay? Forward rate pa rin yun. Okay. So we will learn later. We will in fact be computing the forward rate. We will learn how to compute that. Okay. So this is what you call the forward rate. So this is normally mentioned when entering forward contracts or future contracts. So binabanggit yan, yung forward rate. Okay? Another terminology is what we call the discount rate. This is the selling of a currency at a spot rate that is less than the forward rate. Okay? So what does that mean? No? This is the selling of a currency at a spot rate that is less than the forward rate. So this should be less than the future rate. Okay, so for example, if the spot rate today is 45 pesos per US dollar, and then after 2 months, the forward rate, we determine the forward rate is 46 pesos. 45 ngayon, 46 sa future. Okay. Tumaas na yung exchange rate ng Philippine peso to the dollar. Nagmahal yung dollar, no? Nag-depreciate yung Philippine peso. 45 ngayon, 46 sa future. Di ba? Ang tawag doon, discount rate. Minsan ang tawag din nila dito, sometimes they call this forward discount rate. Forward, they add the word forward to mention that it's the future forward discount rate. Okay? So nagmahal yung foreign currency. Okay? Because our currency, the Philippine peso, depreciated. Okay? So when it depreciated, no, when it depreciates in the future, ang tawag doon, discount. It's discounted. Okay. Discount rate yun. Okay? Questions? Now, on the other hand, yung premium, it's the exact opposite. So you're selling the currency at a spot rate that is more than the future rate. So yung future rate mas mababa. Mas mababa yung future rate. Di ba? So, halimbawa, no, yung exchange rate ngayon, 45 pesos. Sa future, yung future rate, 43 pesos. From 45, 43 sa future. Kaya halimbawa, 45 pesos ng exchange rate. Tapos we agree upon a forward rate of 43. So in the future, let's say after 2 months, 43 pesos yung exchange rate natin. Okay, so makikita nyo, bumaba yung dollar. So nagmura halimbawa yung dollar, 45 to 43. 45 yung spot rate, 43 naman yung future rate. Diba? So ang tawag doon, premium. So it's a premium because the Philippine peso actually appreciates. Lumakas, it appreciates. So premium yun. Okay? So, para madaling matandaan or maalala, pag discount, it depreciates in the future. our currency depreciates in the future. Okay? Pag premium, our currency appreciates in the future. It appreciates in the future. So yun ang pagkakaiba ng discount rate at saka premium rate. Yung premium rate, sometimes they also call this forward premium rate. Okay? Yan. So, pagka discount rate, no, in the future, nagmahal yung dollar. Discount rate yun. Pag premium rate, no, ibig sabihin sa future, nagmura. Nagmura naman yung dollar. Okay? So, be careful with that, class. Questions? Okay, medyo tricky yun, no, yung discount rate. No? So, be careful with that. Discount rate sa premium rate. Minsan, marami ring nalilito. Tricky din yung yung direct code tsaka indirect code. Tricky rin yun. Direct code tsaka indirect code. So, be careful with that. Okay. Pati rin yung futures contract tsaka forward. No, futures market tsaka forward market. They're similar. Pero in reality, yung futures market, sabi ko nga, merong establishment, merong arbiter para siyang stock exchange. Okay? Ayan. Questions? What about hedging? Term din yan sa this is also a term in foreign exchange. What about hedging or hedge? So this is protecting yourself from future risks. Future risks. Diba? So you hedge yourself. Oh, actually, yung ginagawa sa forward market tsaka sa future market, hedging na yun. No? Remember what the farmer is doing when he actually enters a future contract and agree with somebody to buy his produce at a certain price in the future. So that's already hedging. You enter a forward contract or you enter into a future contract. Okay? When you agree with somebody to have a future exchange rate, no? So you determine the forward rate. When you determine the forward rate, that's already a form of hedging. Okay? So yung diniscuss natin na forward rate, no, forward market, futures market, hedging na yun. So you are protecting yourself from changes in price volatility, future risk, okay, future changes in price that might be detrimental to you. Madalas naririnig nyo rin yung terminology na hedge fund. Hedge fund, di ba? Naririnig nyo. So ang hedge fund, yan? Para sa mga investors. So it's a way of protecting your money, your investment. You put it on an hedge fund. And supposedly these hedge funds, no, they make your money profitable again by trading. No? Trade nila yan, ini-invest din nila yan. But a hedge fund is a way for you to diversify your portfolio. You put it in a hedge fund. It's a form of investment also. Okay, so when you say you're putting your money in a hedge fund, ideally it's protected. Kasi yung mga hedge fund managers, supposedly, sila yung mga pinakamagagaling sa industry. And they have a track record of not losing money, and they have a track record of making your money earn more revenues. Okay, so hedge fund. Okay, so minsan naririnig niyo yan, diba, sa business news, no? When you read articles, so yun ang ibig sabihin mo. Hedging. Ang hedge kasi di ba parang siya, bakod na gawa sa halaman. Diyan pa ba kayo? Okay pa ba kayo dyan?
Yes po, sir.
Opo.
Ganda. Oh, okay itong classroom eh, no? May mga nagtitinda. May mga deliveries. Ganun talaga. Okay? So do you have any questions about these terminologies? Yeah. Bid ask price, direct quote, indirect quote, forward rate, discount rate, premium hedging. Okay? Questions? Itong
Wala
buy,
po, sir.
itong buy, ito yung asking price ng bank, by the way. Ito yung sell, ito yung bid. Bid. No? So pag bibili ka ng dollar sa Banco de Oro, ito yung lowest bid. The international monetary system. So, this is actually a brief history of why we have this world order or economic order, no, of foreign currencies, no? World order of trade, world order of the economy. Okay, so it all started with the Bretton Woods Agreement. So we have this structure today, no, where countries trade with one another. We are using the dollar, no, in our trade. We are using most of the dollar. We can borrow money from international institutions like the IMF and the World Bank. Prices today and exchange rate today is more stabilized. Trade agreement is now more regulated than before. Okay, it's now easier to import and export, trade with other countries. Okay, this is what we mean when I say we have this new world order, this economic order that we have. So how did we how did it all start? No, where did it all start? Okay, so it all started with the Bretton Woods Agreement. So it is the 1944 decision to establish a global currency system using the US dollar as the world currency. And it is pegged or it is fixed at an exchange rate, no, equivalent to gold. And also other currencies, are also pegged with the value of the US dollar, and they all agree to use the US dollar for all of their international trade transactions. Okay, that's the Bretton Woods Agreement. The Bretton Woods Agreement class established the World Bank and the International Monetary Fund. So that's 1944, right before the end of World War II. Okay, why did we establish this agreement? Why did the nations of the world establish this agreement? First and foremost, class, for world peace and for world order. Okay, and for the prosperity of all nations in the world. After World War II, people in the world, leaders actually realized that many causes of the war were economic in nature. World War I, World War II, economic in nature yan. Okay? So in other words, dahil nagkakaroon ng depression, recession, maraming naghihirap, nagkakaroon ng mga revolution, nagkakaroon ng mga radical ideas, and these things, all cause political and social turmoil and can lead to war. It actually led to war. That's why we had World War I and World War II. So the establishment of the Bretton Agreements tried to consolidate the economy of the world. Okay, para wala nang bansang naghihirap. Di ba? Let's have a lot of regulation so that we can trade easily. Okay, walang lituhan. Okay? So walang lituhan sa pera, di ba? Sa exchange rate. Okay? So yan ang origins yan. That is why we had this Bretton Woods Agreement. The Bretton Woods Agreement, a real aim was actually to uplift the lives of many people, to emancipate, in other words, our economic life, our well-being, and hopefully help nations progress. Sikat na personality sa Bretton Woods Agreement si John Maynard Keynes, no? If you remember your economics, si John Maynard Keynes, member yan ng Bretton Woods Agreement. Kaya many of the ideas actually today implemented are based on the ideas of John Maynard Keynes. Okay. So gold standard, no? This is the monetary system that pegs currency values to the market of gold. This was before. Today, what we are using is actually the fiat standard. Meron ba yan dito, Rita? Wala. Okay? Banggitin ko na. Kasi what we have today is the fiat standard. In other words, the currency, the value of the currency, like the foreign exchange, the foreign exchange is based on demand and supply. Remember, I have discussed that earlier. Now we have a better understanding. The value of foreign exchange, the value of currency is just floating in the market. So when we say it's floating, it's influenced by demand and supply and other forces, politics, society, peace and order. It's affected by that, by many things. Dati kasi nakapeg sa gold standard. Yung US dollar, yun ang ginagamit na pan-trade ng world economy. Tapos yung US dollar, meron siyang gold value. Okay? Yun ang gold standard. Yung dollar actually before, meron yung phrase sa baba eh. Nakalagay doon kung magkanong unit of dollar na pwede mo siyang ipalit. Like for example, this $1 can be, in a way, it's stated that this $1 can be exchanged to a bank. And they will exchange it for this amount of gold. Dati nagagawa yun. Punta ka sa bangko, dala mo yung $1 mo. Tapos ipapalit mo sa gold. Kasi yung value ng pera dati, yung US dollar, na ginagamit na pang trade, may halagang ginto yun. Dati yun. Okay? Pero ngayon hindi na. Free floating na yung lahat ng currencies ngayon. Tawag doon, fiat standard. Okay? So yan, dyan nagsimula actually yung Bretton Woods Agreement, nagsimula sila sa US dollar. Kaya naging popular ang dollar hanggang ngayon. Kasi everybody likes to be paid with the US dollar because they know that they can exchange it with gold. Kaya very, very strong yung US dollar. That was before. But later na, inalis na yung US dollar sa gold standard. So, wala na yata ngayong money na gumagamit ng gold standard. Puro fiat standard na. Okay. Merong money na naka-base or naka-peg sa value ng foreign currency. Pero sa value ng precious metal, wala na. Although, meron pa rin mga nations na may gold reserve. And that also adds to their wealth. Just like I mentioned, United States, Switzerland. Yan, meron sila mga gold reserve. Okay. Philippines, meron din tayong gold reserve. Okay. Before we had a field trip in the central bank. I was in, I think, grade 3. So the central bank, yung Mint, and they actually showed us, but they did not show us the vote, but they showed us a sample of the gold that they keep in the central bank. That was a long time ago. Sana nandun pa. Okay. So I'm assuming meron pa tayong gold reserve. Okay. So the Bretton Woods Agreement established the International Monetary Fund. It also established the World Bank. Okay. The International Monetary Fund is the financial authority that helps ensure the stability of exchange rate, the monetary system, and the financial system. They also lend money to countries. So where does the fund come from? Actually, mayroong contributing fund ang bawat member. Mga highest contributors, US, China, Japan. Okay, so the euro, they contribute a lot of their funds to the IMF. Now rather, they contribute a lot to the fund of the International Monetary Fund. Ayan. Okay, so doon kinukuha yung pinapautang sa iba sa mga developing countries. Okay? They also advise countries on economic policies. No, they would tell, for example, some countries, oh, huwag kayo masyado mag-print ng maraming pera. No, di-devaluate kayo, baguhin niyo yung policy niyo para maging stable yung inyong exchange rate, no, maging kasing level ng US dollar yung pera nyo, yung value ng pera nyo. O, ganun, they give advice, economic advice to countries. And they also lend money to developing countries. Okay, so just like the Philippines, marami tayong utang sa IMF. Okay? Yung World Bank, ganun din. No, it's also established by the Bretton Woods Agreement. No, halos sabay yan na establish yung IMF tsaka World Bank. Yung World Bank naman, the World Bank was established to eliminate, no, decrease poverty. Okay, so for uplifting the standard of living naman ng World Bank. The World Bank is also considered as the central bank of all central banks. No? They give advice to central banks on how to manage the economy. Okay, that's the World Bank. And we can also borrow money from the World Bank. Ayan. Okay. Do you have any questions so far, class? Class?
None, sir.
Okay, thank you, Andrea. So I will be ending my